we've seen quite a bit of decline in European markets for last 3 or 4 days. Do you think this Brexit worry is now getting too big, and do you see this as catalyst of next round of correction?
Yeah, I mean, certainly, clearly, Brexit's at the forefront of more risk aversion in the short term. Obviously, we've got Spanish elections coming up as well, so it's not just the UK which is worrying particularly European investors. It's the broader implications of Brexit and what's going on in Spain as well.
Okay. Jonathan, hi. Good afternoon. You manage the Ashburton India Equity Fund as well. Wondered your thoughts on what the view is on India now from the FII community, because we've suddenly seen an inflow of money into India, perhaps because the domestic macros are improving, earnings are looking good. But what's the sense you're getting here on?
So it's interesting. I think, the last year and a half, the Indian market's been, quite frankly, a disappointment for foreign investors. But what we've been telling our investors certainly is that it's broader emerging market concerns that have been hampering the Indian stock market, as well as this lack or this earnings the earnings issues that we've been having for some time, be it banking sector related or commodity complex related. So I think now there has been a perceptible shift. Clearly India lagged in the first few months of the year as some of the other emerging markets roared up. But I think India has now caught up, and for us, I think it's an appreciation that we are seeing slowly more on-the-ground signs of recovery within the economy. But more importantly, from an equity investor perspective, we're also seeing, for the first time in many quarters, some companies coming out with some decent numbers.
Jonathan, in your India fund, one of the large holdings is Tata Motors, and that stock has done remarkably well for you over the last 6 months or so. Do you think this whole global correction could have its impact on stocks like Tata Motors, or are you quite okay with the stock even at current levels?
Yeah, we've held this through some pretty volatile times. A few months back, when everybody's worrying about China, Tata Motors really took it on the chin. We held it through that, and actually we added into that. For us, the story, if I look at Brexit, and if Brexit actually happens, then clearly the pound's going to suffer a bit in the short term, and that should benefit ultimately Jaguar Land Rover business. But broadly speaking, we're really comfortable with the product lineup that company has, and as long as we don't think, which we don't, that the global economy is going to crash anytime soon, then the sort of structural shifts that are playing in towards Tata Motors and Jaguar Land Rover's product cycle, for us means we're still very attracted to the stock.
Okay, still very attracted, yes. You held that stock through thick and thin, and now that stock has recovered and is back at the all-time high, or 52-week high rather. The other space that you're into is the financial space. One of your largest holdings is in names like HDFC and in Axis Bank as well. I don't know if you've been tracking the various norms that the RBI has come out with in order to deal with a stressed asset situation. Do you think that we're nearing perhaps somewhere near the end of the NPA cycle, or do you think that things could get worse?
Well, I'm not going to give you a Winston Churchill quote about the beginning of the end or the end of the beginning, but clearly the cycle's got a bit further to go. But I think certainly looking from outside, when you compare India to markets like China, where they're hiding the whole MPL issue, there's still a lot of uncertainty around that. I think a lot of investors take comfort from the fact that both the government and the RBI is trying to deal with this, and the news out late yesterday, I think, is a further slight positive for the sector. It's slightly more pragmatic reaction from the RBI. That's on sort of our read. But ultimately, Indian banks are getting to grips with it. There's still issues ahead, particularly for the PSU space. But for the sort of private sector banks, the wholesale banks, I think this is further good news, and ultimately the problem is being recognized and dealt with. But of course, I think it will take some time longer before it's actually finished.
Okay, Jonathan, the other point that I want to discuss with you is that you have quite a bit of overweight on industrials in your India fund, and industrials have done well over the last few months. Do you reckon there's more money to be made in this space?
Yeah, I mean, the way we view it, we try not to be too short-term. So ultimately, we've been overweight industrials for the best part of 3 years. That's worked most of the time. There's periods where it's come back and hurt us, but ultimately the stocks that we've got are exposed to secular growth stories. And we're very comfortable, again, playing the slightly medium to longer term view on these names. In the short term, sometimes valuations probably reach fair value, but ultimately most of the investors in our fund do take a slightly longer term view, and these are secular growth stories that we ultimately want to be in. Of course, as I said, from time to time these things do reach fair value, but ultimately, on a longer term basis, we still want to be exposed to some of these names.
Okay. Well, one of the hottest spaces to be in these days is the NBFC space, and I noticed that you have capital first in both your funds, something that you didn't have the last time we spoke. Do you see a lot of potential in the NBFCs in some of the microfinances or the lenders?
Yeah, so look, we've interacted with the senior management of that company for quite some time. Very impressed with the systems that they employ and the overall how they view and the lending and how they lend. And for us, the very nimble players like Capital First, they're accessing segments of the market which the banks just aren't anywhere near. So again, from a portfolio perspective, we do have banking exposure, but it's also for us good to have exposure to other segments of the economy where we do see that structural growth coming through, and which is underserved by most of the larger universal banks. So absolutely, there's a big role for NBFCs in a portfolio.
Jonathan, two stocks which have done really well for you over the last 3 or 5 years have been Infosys and Eicher Motors. But do you get a sense that valuation-wise these stocks have now become a bit too expensive?
Yeah, it's interesting. The street's worrying a little bit, particularly about Eicher. I mean, we've had it for many, many years, as you rightly say. I think for us, it is the stock has done well. It's looking a bit pricey in the short term. For us, I think the street's probably underestimating the potential of the export side of the business over the next 3 or 4 years. So again, whilst waiting lists have certainly come down in the domestic segment for the motorcycle business, we do think, taking a slightly longer term view, that there is still a massive market opportunity in other emerging markets and market segments that are very poorly served or even non-existent. So the export side of the business remains an interesting story, but one that hasn't really started. So, we're prepared to ride through periods of fair value or even overvalue in names where we have a lot of faith in the long-term strategy.
Well, you just mentioned how you interacted with the management of Capital First and you're quite impressed with them. Another very impressive and best-in-class management, if you'd want to call it, is the Murugappa Group. And one of their stocks that you hold is Tube Investments, which has been doing really well over the past many, many years. But now do you think valuations are catching up, or would you still see a lot of value in names like these?
We still see a lot of value there. I mean, obviously that's a mixture of financial services and the more dirty actual engineering businesses. So the value that we see is certainly coming through on the engineering side at the moment. Clearly, we've had some divestments in the insurance business, which has been very value accretive for the parent, for Tube Investments as such. But we think with the recovery in the economy, actually the engineering businesses can really start kicking in here, and even the cycle business, which has been very steady, certainly will benefit from an uptick in consumer confidence and actually the broader economic recovery. So the more traditional side of the businesses, I think, can step up to the plate here, which is why we're very comfortable to remain holding that particular counter.
Okay, Jonathan, surprisingly, one blue chip stock which hasn't done well is HDFC. And valuation-wise, in fact, it's now cheaper than its recent averages. Do you get temptation to add more, use some of the cash that you have to add more to this stock?
Yeah, and I think that's a very, very valid point. And actually, we just very recently have topped up our positions in that particular name on the exact point that you make, that we are at global financial crisis valuation levels. Clearly there are some concerns out there in the market, but for us, at these valuations, with the underlying structural story that we still think is out there for most of the businesses segments, and in combination with a phenomenal management team, we're happy with that counter, and as said, we have been topping it up.
Okay, and one final question then. You did mention that the Indian market has not done as well as some would have expected it to do over the past 1 to 1.5 years. What do you see as the way forward for India? Do you see a lot more returns for investors from now, say, over the next 6 to 12 months?
So I think we're fairly positive. I think the domestic side of the equation, if you like, is finally beginning to come through, and we think international investors will start to register hopefully the earnings recovery that we're seeing. They heard a lot about this hype about the Modi government and reform, and then there was an issue with delivery, I guess, in the very short term. But I think now that this economic recovery is gradually, and it is still gradually, broadening out, and we're seeing an earnings recovery, I think people will take more note of India. And ultimately, a good double-digit, I'm not sure what the latest consensus numbers are for next year's earnings, but high double-digit growth will catch the attention of international investors, quite frankly, in a growth-starved world. And particularly, when you consider now that, German 10-year government bonds have gone negative yield. So I think the growth will attract people's attention, and ultimately that should drive pretty decent returns going forward.
Okay, that was my final question, Jonathan. Do you think the Indian market is sort of ignoring the global headwinds? We have seen a big rally in the Indian market over the last 2 or 3 months, and from the top, we haven't seen too much of a correction. Would you want to see some correction to make this market healthy, or do you think the market should continue to outperform?
So I think it did underperform. It's had a period of underperformance, yes. and the last couple of months have been catch-up, to what I would really consider catch-up, and some pricing in of that earnings recovery, as well as some movement on the political front from a reform perspective. I think we are in a strange period. Obviously, globally, there's a lot of risk out there. So there's no doubt India would certainly, in a global risk-off scenario, be hit. But underlying, yes, the valuations don't look, broadly speaking, too expensive to us for India for where we are in the cycle. And therefore, whilst there could be volatility out there that comes from external factors, India ultimately, why do foreign investors, for example, buy India? It's the domestic story. They don't buy India for exports. They buy it because of that domestic growth story. And ultimately, it doesn't really matter what goes on in the US or Europe. That domestic story is very stable and attractive for overseas investors. And I don't see that, that story won't disappear anytime soon.
Okay, well, we'll let you go on that note. Thank you, Jonathan, for taking the time out and speaking to us not just about our own markets, but about a lot of the stocks that you hold. That's Ashburton. They manage big funds, the India Equity Opportunity Fund and the Chindia Fund, which is a mix of the Chinese and the Indian stocks. And they say that India relatively looks like a much better place because things in China are just going downhill, especially when it comes to their own banking and NPA problems. India looks like a much cleaner shirt. But let's